ETFs currently control 650,000 Bitcoin within 7 trading sessions, right? 650,318 Bitcoin within 7 trading sessions. Now, albeit you had GBTC in play already and it had the largest amount, but BlackRock is above $1 billion in AUM. You got Fidelity above $1 billion in AUM. You got BlackRock versus Fidelity fighting for who's got the most amount of volume. You've got these guys. I mean, just to put it into perspective, the BlackRock fund controls 28,622 Bitcoin as of this point. It's been 7 trading sessions. So I think that there is, different parts that, retail is missing. If you're sitting in retail going, okay, the ETF's here, now, nothing really happened to price, etc., then you're not understanding what's going on in the underbelly of the market. And in the underbelly of the market, the Bitcoin's being hoovered up and put into different places. Now, again, like I said in my video yesterday, I made 2 predictions days before the ETFs were approved, in addition to all of the predictions I was making since last June about, the spot Bitcoin ETFs, which was true. But the 2 that I made directly days before the ETF were approved were completely wrong. And number 1 was that there would be $3.5 billion worth of net inflows. And number 2 was, if number 1 was correct, then we would have a price of $57,000 to $62,000. Of course, that was in the first trading week. Completely wrong on both of those. I was actually going to release a video walking through my analysis of why I was wrong and what changed in the market and what I didn't see. It's sort of like an analysis that I would do myself, but I'm going to put it on video. But I'm going to have to put that out tomorrow. So please subscribe so you don't miss that. In today's video, I want to talk about how these ETFs are going to hoover up another 600,000 Bitcoin before you can blink. Right? I think that by the end of 2028, by the next cycle, they're going to they're going to be controlling at least, at a minimum, 1.2 million Bitcoin. What that means is that's 450 Bitcoin per day being hoovered up every trading session, right? Just to put that into a relatable perspective, that is all of the Bitcoin mining supply coming out on a daily basis on the trading sessions that the ETFs operate. Now, what does that do to the market, right? What does that do to demand if there is just one buyer? Remember, Bitcoin is not the ETFs, right? Bitcoin is very, very separate to the ETFs. The ETF is just like a big buyer, a big whale buyer coming in and consistently owning and buying Bitcoin on a daily basis. That's what the ETF is. It's not a controller of the network by any stretch of the imagination. It is a buying source. Now, what happens when that buying source has passive flows that have to be allocated on a daily, weekly, monthly basis, and that amounts to 450 Bitcoin per day, all of the mine supply per day being hoovered up at a minimum, right? I'm saying at a minimum, at least 1.1 to 1.2 million Bitcoin will be controlled by the ETFs by 2028. Now, the thing that I think there's 2 things that people haven't even started considering yet, especially retail, because it's not something retail would really think about. It's not something you and I sit here and evaluate, right? We don't have a board. We don't have, a CFO. We don't have any of these things whose job it is to look for the most opportune way to take advantage of certain market developments. But companies like MicroStrategy, people like BlackRock, they have hundreds of people that are just designed daily to sit there and figure out what is the most opportune thing to do with our Bitcoin. And there's 2 opportunities that I think retail is not seeing, but institutional will be seeing. First, the thing that I think has not been seen yet is the opportunities that start showing up after the options get listed. And as I told you, the NYSE filed to the SEC for options, and the SEC has already acknowledged it, which means that it's coming down the pipeline. According to the Bloomberg guys, it's basically 2 to 3 months away. Now imagine, you have the desire for growth in your capital because you've got inflation kicking your ass, and then you also need income, right? Well, what's better than taking an asset that's growing at 50 to 70%, going 30% out of the money, which means that you've got all of the, you've got all of the safety margins that you need, and still generating a 1 to 1.2% per month return. That's what Bitcoin will provide with its volatility. Now, the volatility, I believe, will dampen once the options markets come out, because that's what options markets do. But I still believe you'll be able to, for just a simple strategy, like a covered call strategy, you'll be able to take your Bitcoin at 42, 43,000, agree to sell it for 60,000, and still generate your 1 to 1.2% per month. And this is a big opportunity, because the first thing Grayscale did after converting their fund was to file for a fund, which is the Grayscale Income Fund, where they're going to use covered calls on the GBTC stock. The income ability of Bitcoin ETFs is unreal, right? So like, imagine if you want to put, and in addition to the fact that the options allow income, they also allow hedging, right? Imagine if you wanted to put 10% of your treasury into Bitcoin, and you need the ability to hedge, right? Up until now, there's not really been a solid way to hedge unless you use the futures markets, right? And institutions don't really want to use futures markets for whatever reasons, because there's slippage, there's all these issues with futures contracts. So you haven't been able to, right? Now with options, you'll be able to place some short-term hedges in place, which will make an institution much more comfortable allocating to Bitcoin, because they can smooth out their balance sheet, especially with the FASB rule changes, where Bitcoin is becoming a quarterly mark-to-market asset. So if it's a quarterly mark-to-market asset, then it needs a little bit of stability and smoothing out on its volatility. And the way you do that is through the options market. So you can then go, for example, let's say it's run up. Let's say MSTR, right? It's run up. They can take 0.5% of their position and buy puts to smooth out the volatility on the balance sheet for the next couple of years in a bear market. That's absolutely huge, right? It makes organizations want to invest in Bitcoin, because they can get the growth, they can get the hedge, they can smooth out they can smooth out the volatility on the balance sheet, they can smooth out the share price. Everything works quite well, right? And of course, it's a global market, which means that they don't have to worry about the geographical and the short-term risks that come with other assets. So this is a huge deal. The options markets opening up for Bitcoin is a huge deal. The income and the hedging part is very, very important for institutions, family offices, and companies that want to get into Bitcoin. It's one of the reasons why they would not have been getting into Bitcoin up until now. So number two is, we also haven't seen BlackRock and Fidelity offering people lending and margin on their Bitcoin if it was in the ETF, right? We haven't seen that yet. For example, let's say MicroStrategy with its Bitcoin in the Fidelity ETF, right? Instead of holding it at self-custody at Coinbase, MicroStrategy puts it into, the Fidelity, let's say it was in the Fidelity ETF, they could lever it and increase its positions at fractions above Fed rates, because that's how lending works on financial rails of existing assets. And at the right time, they wouldn't need to take expensive loans or do any Wall Street, oh my God, Michael Saylor's running a straight up clinic for Wall Street, like everyone was saying. They wouldn't need to do that. Right, all they got to do is walk into or make a phone call to Fidelity and say, "Hey, extend us a loan on our existing Bitcoin holdings, a 10% against the position, and now suddenly we can go into the market and buy more Bitcoin with it at the bottom of the market, or whatever that bottom is." One phone call and you're done. You don't need to do any of this expensive loans. You don't need to do any of this weird premium shrinkage, which is going to cause extra volatility as we go forward. So, that's the problem with MicroStrategy right now, is that traders are going to be looking at it going, okay, well, I'm only going to buy it if it's trading below NAV. And the NAV is basically the Bitcoin or whatever dollar value they're assigned to the business. But that's when traders are going to be doing it, right? So it doesn't matter what retail thinks. That's when traders will be getting involved in MicroStrategy, only when it's below NAV to trade it up to at NAV. And then at that point, they'll sell out of it. Now, the other part of this is family offices, institutions, and everyone else will be drawn in by the lending opportunities that Fidelity and BlackRock will present. They want to control Bitcoin. That's what it is here. They want to have as much Bitcoin under their control as possible. And so they will offer the lending solutions and the services that people need, right? We're talking about the ETFs using already existing financial rails to suck in Bitcoin from every corner of the planet, right? They're going to make a phone call and say, hey, you're getting a 14% loan from your Unchained Capital or whoever else, loan against your quote-unquote self-custody, or sorry, quote-unquote physical self-custody Bitcoin. Put it into the ETF and we'll give it to you at 6%. There's a lot of people that would take the tax hit on that and just to get the loan, because they can do more money with the loan. They can make more money with the loan rather than sitting there paying that 14% interest because they're being forced to hold it in, in self-custody, right? And by the way, all of this takes another leap when these funds get converted to in-kind, and that will take a while. I don't think that happens for 2 to 4 years, but I think that as soon as that happens, for example, as soon as the in-kind conversion happens, there is definitely a board meeting happening at MicroStrategy talking about what is the benefit of moving this Bitcoin from self-custody and Coinbase to the Fidelity or BlackRock ETF. That is 100% starting to happen because for a corporation, he's not trying to run away from anyone. He's not trying to hide from anyone. He's not trying to use the core principles of what Bitcoin is about. The not your keys, not your coins doesn't apply to someone like MicroStrategy, right? It might apply to Michael Saylor, but it doesn't apply to MicroStrategy. It's a public company owned by the public. So therefore, once that part is irrelevant, at that point, we've got to be looking at what's the best financial engineering we can do with the Bitcoin and the assets that we have. And that is going to be the ETF. It's just very, very simple, right? So the ETFs are here. They're not fucking around. They're acquiring as much Bitcoin as possible. I believe that there will be $150 to $300 million a day worth of purchasing going on for the foreseeable future. Bitwise yesterday released that they alone had $58 million worth of net inflows into their fund yesterday. So this is happening right now. If you're looking at the price going, oh my God, what's happening to the price if all this ETF demand is coming in? There's been an overwhelming amount of selling pressure from GBTC. There's been an overwhelming amount of selling pressure from miners. There's been an overwhelming amount of selling pressure from people who were playing the trade of the ETF approval, right? Because if you did that, if you bought when BlackRock applied and sold on approval day, you were up like 75%, right? You were up like 75%. That's a pretty good trade for a trader. So there is selling pressure in the market right now, but that doesn't take away, and it doesn't take away, number one, from the amount of inflows that are coming into the funds right now. It doesn't take away from the amount of interest that there is in the market right now for Bitcoin. It doesn't take away from the fact that $60 trillion are about to be inherited by the Bitcoin generation over the next 10 to 15 years, and it doesn't take into account. It doesn't affect the amount of demand that's coming down the pipeline into an asset. You are about, as my friend Samson said, because he likes getting credit for it, we are about to meet a situation where passive allocation flows are about to meet true final scarcity, right? True scarcity is about to be slapped in the face by consistent daily allocation flows. And remember, they don't care about prices. All they care about is getting a percentage allocation of the portfolio. They don't care about your self-custody dreams. They care about getting a certain percentage of the allocation of the portfolio. Now, do I think people need to worry about self-custody and this, that, and the other? Absolutely. I have my portfolio split. But these people don't care. All they want is a percentage allocation because they're looking for the 50 to 70% CAGR over 10 years to boost the returns of their portfolio. And I believe that BlackRock hasn't even started allocating any significant capital. They've been celebrating the bleed from GBTC, and the bleed from GBTC will stop at some point, and that's when the capital will be allocated. But again, that was one of the things that I was wrong on, and I'm going to release that video tomorrow on Sunday the 21st. So please subscribe to the channel so you don't miss that. I'm going to walk through every single scenario in the market that I saw that made my prediction wrong, even though it was an overwhelming success in terms of the actual ETF. I want to talk about why those two specific predictions, despite everything else being right, those two specific predictions were wrong, and what that means for the market, for the price, for everything else that's going on in Bitcoin right now. So please subscribe, share the video, and again, the faster you subscribe, the faster I can spank the YouTube algorithm to get Bitcoin information out to people. My goal is obviously, as I've stated many times, to get as many people to one Bitcoin as possible. As I've said, the time for my message is running out, right? By December 2024, if what I think is happening, this will all be cleaned up. All of this selling sludge from MSTR, from GBTC will be cleaned up by then. And if that happens, then by the end of the year, pretty much, low single-digit millionaires are priced out of the market in terms of getting to one Bitcoin. So I'm trying to get this out as urgently to as many people as possible, and I need your help to do it. You need to subscribe, share the videos, and get people understanding what is coming down the pipeline for Bitcoin. Don't be distracted by the price action in the short term, because the demand is still there, the hoovering up is still there, and this is still happening, and it's on track, and it's actually more successful than any other ETF asset class that's ever been launched. So this is no joke here. It's time to stay focused, because at this point they're coming, right? It's not even that they're coming, they're here, right? They're actually here purchasing this Bitcoin, hoovering up 10,000 Bitcoin a day at this point, and I believe that will slow down. But just all of the mining supply that comes out over the next 4 years, I believe, will be taken up by the ETFs, and then that's before they get into all these games around financing, around options, around everything else. So, it's time to get serious. It's time to get your allocation up. No matter if you're sitting on a real estate portfolio. I've said this year I think real estate will be the least, the worst performing asset class out of the main four. And if you're sitting there with real estate, and you're not getting an allocation to Bitcoin, it's so easy now because you can use the ETF to do it. And it's time to start learning. It's time to start taking the self-responsibility to actually learn, to actually get the amount of Bitcoin that you need, which I would say you start at a minimum of one Bitcoin. So on that note, remember, ultimately, there are always only 3 rules to Bitcoin. Step number 1, you buy Bitcoin. Step number 2, shut the fuck up. And step number 3, you get fabulously wealthy.